The three principles for achieving financial prosperity. Why be concerned with principles when all you have to do is obey the law? The focus here is on three principles: avoidance of taxation, efficient application of the Rule of 72, and avoidance of market losses. There is a second synergy among these three principles, in that your wealth generating power is magnified by properly combining these. For many, having convinced themselves that they have an affordability issue, consistent accumulation of wealth requires an additional stream of income, providing for which is part of planning strategically and is addressed in the second session. The first of the three principles for achieving financial prosperity is avoidance of taxation. Being familiar with a little history is essential to observing this principle. Why is history important? By the 1890s, the U.S. government had become consumed with this question: how do you get the people to do something they do not want to do and cannot be required to do? By the end of the century, they had arrived at this answer: get them to believe they are required to do it and will suffer terribly if they do not. Also, give them some benefits in advance so they can reason on these. Can they really do that? That is exactly what the U.S. government began doing in the early part of the year 1900s. First, and no doubt with great publicity, they promoted, as though ratified in 1913, what would be merely the sixth constitutional amendment after the Bill of Rights, to give Congress authority to require an income tax from the people. And then they let the amendment simmer for 3 decades. After the stock market crash of 1929, which ended the economically prosperous period known as the Roaring Twenties, the creation of the Securities Exchange Commission, or SEC, in 1934 was followed by the creation of the Social Security Administration, or SSA, in 1935. No doubt, each of these new government agencies was designed not only to create jobs during a long, slow period of economic recovery, but also to provide the people with peace of mind, coupled with a sense that the government would not again allow millions to go without work and a means to provide food for their families. Indeed, the creation of the National Industrial Recovery Act, or NIRA, and the National Recovery Administration, or NRA, in 1933 was for these very purposes. However, no sooner than the SSA began siphoning from the masses old age, survivors, and disability insurance, or OASDI taxes, in 1935, the IRS, a bureau of the U.S. Department of the Treasury in existence since 1862, began siphoning from the masses income taxes in 1943. If the Constitution was amended, what new laws were passed? It must be noted that the U.S. Congress has never enacted any law requiring individuals to pay what was then known as OASDI taxes, or what was later known popularly as FICA taxes, or what is now known popularly as Social Security and Medicare taxes. But the U.S. Congress has enacted laws encouraging employers to withhold these taxes from earnings and requiring such employers to pay to the SSA through the IRS the liability thus created for the employers, but not for the employees. Why has Congress never enacted any law requiring these taxes? It must also be noted that the 1913 16th Amendment to the U.S. Constitution, the so-called Income Tax Amendment just mentioned, was not in fact ratified by the required majority vote, nor did it authorize any tax not already authorized by the U.S. Constitution. This is most likely the reason that 30 years elapsed before the first income tax was withheld from earnings, and most likely the reason the U.S. Congress has never, at least not since the U.S. Supreme Court overturned the 1894 income tax as unconstitutional, enacted any law requiring individuals to pay income tax. But the U.S. Congress has enacted laws encouraging employers to withhold this tax from earnings and requiring such employers to pay to the IRS the liability thus created for the employers, but not for the employees. If there has never been a law, why does everybody pay income tax? By the time the collection of income tax began, individual employees were already well accustomed to payroll deductions for a prior category of taxation. Whereas OASDI taxes are calculated by straight percentages, income taxes are calculated by brackets of percentages, and the Secretary of the Department of the Treasury, through the IRS, provides tables to help employers determine how much to withhold for each employee. What individuals in the U.S. Congress have done, and individuals in most of the state Congresses have done likewise, is enact nearly innumerable laws to create the appearance of an obligation to pay these taxes, and thereby encourage individuals to volunteer to pay these taxes out of confusion and frustration. No apparent choice exists not to volunteer. Such individuals are then left only to reason on the benefits and the foregone greater suffering resulting from volunteering to pay these taxes. Just how great is this suffering? Many people indicate that they feel that they really do not pay very much in taxes. Many others demonstrate that they recognize that the burden is quite heavy. Many are influenced by the steady barrage of IRS propaganda insisting that everyone must volunteer to pay taxes on all income. Propaganda such as the Form 1040 series statement, under penalties of perjury, just above the signature line, and such as posters that demand, "You owe taxes." Is it really all that much that people end up paying? The result is that, as mentioned in the article excerpt accompanying this session, your federal tax bill could total in the hundreds of thousands of dollars over the course of your lifetime. If you earn a six-figure income, then you might be looking at $1 million lifetime tax bill. As the comment following the excerpt states, this is devastating to your financial prosperity. Worse yet, this is in fact overpayment of your lawful obligation. Law or no law, is there not a patriotic duty to pay federal income tax? Many people feel that it is their patriotic duty to pay federal income tax. However, the same U.S. Supreme Court pronouncement that says that anyone may so arrange his affairs so that his taxes shall be as low as possible also says that there is not even a patriotic duty to increase one's taxes or overpay, that is, pay beyond the requirements of the actual language of the law. This pronouncement is item 5 of Appendix F, the courts, very near the end of the ebook accompanying this session. Does the government at least not make good use of this overpayment? Even worse, as highlighted throughout the special report accompanying this session, governmental accounting integrity issues result in waste of your tax dollars. As indicated in the next document accompanying this session, the Congressional Budget Office reports that the IRS now collects trillions of dollars annually in non-refunded overpayments of individual federal income taxes. What about state income tax? Although the actual language of the law of 11 states does require that individuals or corporations or both pay state income tax, and the actual language of the law of 4 states requires that in specific limited situations, individuals pay state tax based on income, 33 states collect state income tax regardless of the actual language of the law. As the statistical summary in the ebook accompanying this session highlights, the legislatures of these states have not established all 3 elements of the essential statutory formula for income tax. Only 2 states neither collect any form of income tax nor require the payment of any form of income tax by the actual language of the law. How does all of this apply to you? If you have not already done so, look at your recent individual income tax returns and not the amounts due or the refund amounts, but the total tax amounts to see in print exactly how much you have been overpaying. Depending on the year, look at lines 60, 61, 62, or 63 on your federal individual income tax returns. Refer also to your state income tax returns, if any. Then use these total tax amounts to project how much money you could start putting back in your pocket. Being aware of these facts is the first part of avoidance of taxation. Even if they do not deliberately take advantage of you, Tax collectors will, as a matter of the course of their duties, and blissfully unaware of their own ignorance, carry out legal extortion against you based on what you do not know. Acting on your awareness is the second part of avoidance of taxation, which will be explained in the second session.